Hello there, this is Samuel from LS Financial, and today is the 21st of April 2017, and my current time here is 8:44 p.m. GMT. I want to do a quick review on the Great British Pound Nzdjpy. If you have been following my feeds and my analysis for quite a while now, I have been on the Great British Pound New Zealand dollar for quite some time now, and my bias is a bearish bias, and I will point out very soon. Now, if you haven't watched my previous analysis on the Great British Pound Nzdjpy, I encourage you to watch it, but I'll do a quick review on what I had been planning on this very one. So I had stated that this currency pair is in a downtrend. It's in a general downtrend, and I pointed out that this currency pair was supposed to find resistance around this trend line, and then we would see some sort of a pullback to the bearish side. Okay, so that is what I anticipate on this one. So when we go to the daily time frame, I pointed out that as of last week, 2 weeks ago, we had been around this point, and I had said that this level was acting as resistance, and the market was finding it quite difficult to penetrate through. But eventually, you can clearly see that we penetrated through this level, and I pointed out that there was a level higher I was looking at, and that was 82.30. So that was where I was looking at the market to find the next level of resistance, and clearly we see this market having a very hard time penetrating through this level. So what I see onward from here is that I see somewhat of a retracement, at least to this level around let's do this level around 74.70. That is my level I'm looking for to take profits from. So I'm looking to sell this currency pair after several confirmations, of course. Like for example, I'll be looking at a counter trend line like this. Okay, so if I see the candles at the south side of this red counter trend line, then it's a go time, and I start selling this until I get to 74.70. So that is it on the Great British Pound Nzdjpy. So a quick recap: I expect the market to respect this level of resistance, and then we would have the bearish push down to 74.70 or even lower. Okay, so that is it on the Great British Pound Nzdjpy, and I want to do a quick one on the Nzdjpy Japanese yen. For this very one, let's squeeze it up for me to see. Okay, yes, so on this currency pair and on the weekly time frame, we have established that this currency pair has been in an uptrend for quite a while now, for over 6 years now. Apparently it has been in this trend for a while now, since 2009. Okay, so that's all the market has been doing, creating higher highs and keeps rallying. Now, what we have found quite recently is that, first off, we need to establish that the market has fallen for the past 2 weeks without any form of retracement. Now, we know the market waves, it moves in waves, so it creates, even if it's going in a downtrend, it's going to go lower lows, lower highs, lower lows, lower highs, and if it's going up, it's going to create higher highs and higher lows and higher highs and higher lows. Okay, so that is what the market is identified of doing. But with what we are seeing here for the past two months, we haven't seen any form of bullish retracement for this downward trend. So it's logical for the market to retrace for quite a bit. Okay, so with this, let's transit to the daily time frame to point out something. Now, we know that the market waves, just like I keep saying. Now, this is what I see here. This is the recent downtrend we have found, right? So this market keeps creating lower lows and lower highs. So it took out this low, created this, and then so this is all what the market has been doing, creating lower lows and higher highs. Okay, now realize that whenever the market is retracing, it retraces to the next level of resistance. Okay, so now there are two levels of resistance or supports I'm looking to take this market up towards. Now, first off, I need to point out the reason why I think this market is ready to push up. Now, I pointed out from the weekly time frame that the market has waved down for the past 2 months without any form of retracement. That is number one. Secondly, quite recently we have found the market had broken past a counter trend line, which I'm pointing out in a bit, and we see the market creating this. We find the candles at the north side of this counter trend line. This is clearly indicating that the market is ready to push up. Okay, and as clearly we can see, the market has been pushing up for the past 3 or 4 days now. So now our target here would be, I would have 2 targets on here. My closest target from here would be this level of support to act as resistance, as future resistance. So I'll mark that in purple. That is a level I'll be looking at. So I expect the market to hit this level and retrace further, and then we'll continue buying. That is if we have the signs of a continued push high. If we break past this level, then our next level of resistance to become support would be this level around 78.90. Let's round off the figure here. 78.90 is the level I'm looking at, which is about 200 pips away from the current market. So that is it on the pound. That is it on the Nzdjpy. So I'm looking at a bullish push to the upside to around 77.45 as my first target, and 78.90 as my second target. Now, depending on how this particular currency moves, it's going to affect. The same setup is kind of setting up in other yen crosses. So the USD JPY, the Canadian JPY, the Great British Pound JPY. Okay, so that is it. We are looking at a JPY weakness across board for now. Okay, so that is it on the Friday's weekly analysis. And thank you so much for your time, and most importantly for the trust and allowing us to be part of your journey. Okay, so please do well to subscribe to our YouTube channel and make sure you don't miss any of our weekly analysis. Okay, with that said, have a great week ahead, and bye bye.